Okay, good morning, good afternoon, good evening, wherever you are. Welcome back to the Daily Market
morning, good
Analysis.
afternoon, good evening, wherever you are.
Hang on,
Welcome back to the Daily Market
morning,
Analysis.
good afternoon,
Hang on
good
a second.
evening, wherever you are. Welcome. Okay, there we go. So we're here on the Daily Market Analysis.
Good morning, good afternoon, good evening, wherever
Good to have you all
are.
with me. Live stream today. We do have a special guest. We have Darius from Easy Markets with us today. I know my camera is not on yet. I can't figure out that part, but we'll get to that shortly. You'll see my face and Darius shortly. Again, if you are new to the session, do drop a message, say hi, whether you're on TradingView or on YouTube, do drop a message and say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Ether turned up nice and early. Good morning, how you doing? Hey, D-Train, how are you doing? Just want to do a sound check that you guys can hear us okay. Hey, Nav from London, good to have you with us. Welcome back. If you have any questions at any point in time, please feel free to put it into the chat. Let me know. Let Darius know. You can ask questions, ask the hard questions. I might not be able to answer it. I'll get Darius to answer it. There's any particular pairs you're looking at or any trades you've done, do put it into the chat and let us know. We can do a quick review of that as well. But before all that, a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that, now let me figure out the next part. That should come up. Now you see my face. Darius, are you there?
Hey.
There
Hello
is.
again. Can you hear me? Can you hear me? Can you see me? Are you okay? I hope nobody's blinded by the reflection of my bald head. So yes, I hope everybody's having a beautiful start of Tuesday. Again, can I ask from my side, can people hear me, by the way, because we're currently kind of, still practicing with our technical side. So, can just everybody tell me, like, if they can hear me? I mean, as well.
I hear you okay, so I think
Perfect.
it should work. In the meantime, everyone, if you're watching, just so that we know we're not going to be talking for 1 hour and no one heard us, put into the chat, let me know that you can see us okay, you can hear us all right. Good morning, Goju, how are you doing? We have a number of people on YouTube as well. Hey, Jimmy. Hey, Jumarinas. Hey, Faith. Jumarina says all is well, so I think it's all good. Jimmy says all good. Fantastic.
Perfect.
Okay.
Okay, wonderful.
Let
me just adjust some things from my side here as well. So, yep, I think, there we go. That's perfect.
There is a bit of a construction either on that side or that side of my office. So if you hear banging and drilling, just bear with me.
That's fine. I have a noisy lamp as well. So, that's, I don't know if you can hear some sort of like a little buzzing thing or something.
No, mine's like banging and drilling.
Okay.
It's been 2 weeks, Darius. It's been 2 weeks since we spoke. How have you been?
Yeah. Not bad. The markets were, of course, on the crazy side. I mean, of course, we were. That's what we do. We follow the markets. We check what's happening there, right? But yeah, in general, everything was fine. Yes, I cannot say much, but just apart from the fact that it was really interesting to watch. The late kind of latest events in general. Last week probably was we agree probably on the same thing that last week was a little bit more interesting than this week, right?
Yeah. This week it started slow. Yesterday was President's Day, so it started slow. Good thing is the last time we spoke, we said that the dollar. I'm just going to jump straight into it. Again, guys, if you have any questions, put into the chat. We have not scheduled what we're going to be talking about. We're just, going off the cuff. 2% in love with the markets, talking about it. So put it in the chat if you've got any other questions. But I'll share this. And, Darius, at any point in time you want to share anything, just let me know.
Okay.
We spoke about the dollar index, right? We spoke about dollar index, and last week it actually got up to that 105 level. Right, so we were looking at it on a daily time frame, and we were thinking, yep. And at first, I was thinking 104.30, but it's totally shot past that. Got to 105. Right now, back to the H1 time frame, is sitting at 104.33. I've just started doing H4 kind of setups on Mondays. So Mondays I do H4 setups just to plan for the week. Tuesday, Wednesday, Thursday, Fridays, or Tuesday, Wednesday, Thursdays, I do H1. Fridays, I do H1 and a bit of a review of what happened. I was expecting it to drop. It was sitting right there at this 104.20 level. I was thinking it's going to come down to test this 61.8 level before maybe bouncing back, test that support level, test the trend line before bouncing back up. It shot up early this morning. I don't have the reason why it shot up. Might be about the Chinese cutting rates. We'll talk about that shortly. But it seems like it's going to be a short-lived push to the upside. I'm still holding that view that the dollar index is going to head lower. What's your thoughts?
Yeah, I mean, look, on my side, can I share my screen as well?
Sure.
Yeah? So just a sec. Let me just do that. Can you see my screen? For some reason, it's not coming. There we go. It's coming through now. A little bit of a delay, but yeah, I think that's on my side. So this is what I wanted to show you. Basically, yes, the 105, we talked 2 weeks ago about something like that. So great, I'm happy. It came close to my targets. The target was this downside line initially, which is, I get it was a little bit on the tentative side, but still a downside line drawn from the highest point of September of 2022. We came close to it. We kind of, let's say, tested the area and we drifted back down. Now we fell, but we still remain above this upside line, which I have, a steeper one, drawn from the low of the 28th of December of last year. So at this point, probably what I'm going to do, given that it kind of already did everything what I asked it to do, the US dollar was kind enough to do so, but and now what I'm going to do, I'm just going to kind of take a pause and I'm going to wait this one out, and I'm just going to wait until it's going to stop coiling up, because at the moment what I'm seeing is kind of getting into a bit of a squeeze, coiling up. So I needed to see something, doing something a little bit better. This week, to be honest, I think it might, push a little bit higher, maybe kind of end up somewhere, somewhere in this territory here. And by the way, I'm looking at the daily chart.
Yep.
This here, like I said, for me, I think the dollar might not be the most exciting. I think this week is for the other currencies to shine a little bit, like maybe the Canadian dollar, which we'll get to in a bit, of course. Maybe euro. We do have the CPIs, if I'm not mistaken, right? Let me
PMIs, I think.
Yeah. So yeah, I mean, this is, I think this is a week for other currencies and not the US dollar. Next week, it might change a little bit. So that's why on my side, I think that I will, if, let's say for me, I see the dollar, let's say it pushes a little bit higher here, maybe, ends up somewhere this territory, the 104.68, again, something like that. I still kind of, like I said, don't expect it to lead the way. I think that, like I said, if you're trading something like a euro dollar, USDCAD, actually look at the other currency, not the USD one. And because this one, I think they might remain a little bit subdued. So I'm going to be, just long story short, basically I'm waiting for a break. I'm waiting for a break either above this downside line, or I need to see a drop somewhere below this 103 point, on my chart it's around 84, something like that, around here. That's kind of the low of the 5th of Friday. 5th of February.
I'm thinking anywhere, if it breaches below 104, if it breaks 104, I think that might be hopefully
true,
the start of a downward move.
Exactly, could be a good start. My only problem is that, look, as we already, I don't know if people who are watching our shows are regulars here right now, then they will probably know that we look at different technicals, which is fine. We still end up the same conclusion, but when we use different technicals. On my side, for example, if it falls below the 104, yes, it kind of opens the door to some lower levels, but I will be very careful around my EMAs because these lately kind of did their job and did act as good area of resistance and support. So I will, if those get cleared, fantastic. We can go lower. I'm not going to get offended with that. So
I want to see something happen. I want to see something happen. It's been sitting there. It's been trying to go up. It's been bouncing around. Not much has been happening. I want to see the move develop.
True. Like I said, it's coiling up. I mean, look, next week what do we have? Like CB consumer confidence on Monday. We have the final GDP numbers on Tuesday next week from the US. I think that there was something else. Of course. PCE next week on Wednesday we have the PCE. So that's going to be interesting. I think that, like I said, this week the dollar is going to chill. I think that it's going to relax, and then it's going to maybe do some action next week, because Monday there's good, interesting news. Tuesday there's interesting news. Wednesday there's good news. On Thursday we have the ISM manufacturing PMIs, and that's Friday. Sorry, on Thursday we have the
PCE.
Chicago. On Thursday we have the PCE. On Wednesday, we do have the GDP. On Tuesday, we have the CB consumer confidence. And on Monday, new home sales.
And the bad news. The bad news for everyone watching is that on Sunday night, I'm flying out to Dubai. I'll be in Dubai for a week. Yeah, I might not be able to do any streams. I'm hoping to do some videos, but I might not be able to do any streams. So I'm going, as usual, whenever I travel, that's when the move comes. So we'll see how that goes.
Well, you'll just have to somehow, connect to your phone, and yeah.
Speaking about phone, do you trade off the mobile? Do you trade off your mobile phone?
I do because
you break my heart.
I know, but look. I think because it depends on the circumstances. So it's like really, it's difficult sometimes to quickly look. In general, I'll say it this way: I analyze the charts on a desktop. I don't analyze on a phone. I mean, that would be just crazy. So I analyze everything on the computer, on a big screen, on two screens, but the execution mainly happens through the phone. So yes, so that's why it's I think it's this way. Sometimes it's convenient. Sometimes, but when you're for example on the go a little bit, or maybe or you're, let's say, doing something, and again, it's really I think everybody needs to find their own way, their own everything. But on my side, just somehow naturally happened this way. In general, I do like on the desktop. I do like to trade off the desktop, but
I used to say I'm entirely on the desktop. I've now slowly got to the point where I can close a trade on my mobile. I would not enter a trade. I wouldn't even do anything else. I would just look at the trade, and maybe I'll close it on my mobile, but I'm still mostly on the computer. I need the screen.
But that's good. This just shows basically what's good. What's good for you. Like, for example, what's working for you. Like for you, for example, works this routine. And we traders are kind of a little bit sometimes superstitious. We kind of do certain things. We try to repeat certain things in a day. Like one day worked out perfectly, and then you're thinking, how did I have my cup of coffee today? Like, did I drink it from the left hand or from the right hand? So, and it's like, and we kind of start to start to repeat that ritual, and we sometimes think that this, might actually lead to that. Look, I think in a way it does because of what's the word for that? Like you're self-inflicting the thought into your head. Like you're putting that thought, and that's it. If it goes against that thought somehow, you suddenly start to panic and thinking that, oh my God, the day is going to be tragic, and then actually the day is tragic. And then you think that because you didn't have the cup in the right hand or the left hand,
it's a self-fulfilling prophecy,
Exactly. And like I said, this is very interesting to observe in other people as well. Like, and when somebody asks, like, for example, oh, what's your routine? Like, I don't know, like I wake up, I brush my teeth, and I switch on my head and start looking at what's happening,
For me, it depends on the markets, because if it's a active one, then I skip everything. I don't brush my teeth. I just jump straight to the screens. If it's a nice and easy one, then I've got my time.
It's like always brush your teeth. Always. No, but anyway.
Okay.
But yeah, look.
Looking,
in terms of the US dollar, look, I'll switch off. I
want to share Forex Factory that we have here, and like we just mentioned just then, the Chinese you can see that Chinese 5-year LPR by 25 basis points, current mortgage reference rate by most on record. I'm not big on trading. I don't call it exotics, but the non-major pairs. Is this going to have a major impact on the dollar, or is this going to have a major impact across other currency pairs?
For some reason, let's say I'm looking at the like the China 50 index, or let's say USD this one.
CNY.
Come on, stuck in CNH. Stuck in my head, honestly. The USD CNH, so against the offshore yuan. To be honest, there's not much action, and I think that the markets are. They're not really like reacting to this mainly. I think that they need some sort of like more. I think everybody got used to the fact that there's like big stuff happening. Like, oh my God, like Evergrande collapses. Like, oh, let's. Everybody's okay. You drop the rate. Okay, thank you very much. Like, so you're trying to stimulate the economy. You think that you know what, you will benefit the other builders, the big other builders in there, and you're going to be saving, coming out as a savior here. I think that the market got so educated, and I think that they so really don't care unless it's something, let's say, coming out from the party itself. Let's say, suddenly they say, oh, we're going to stop support of everything, right? And then and this is what's going to drive, this is, at this point, I think that this is like just, okay, fair enough. Thank you. It's a good bonus, after New Year. So,
but so far,
I don't know.
So far, it seems like any decision they make, especially on rates like that, it seems to be more of a domestic impact rather than spreading across the globe. It's not like the US cutting rates, although I would like that to happen soon.
True. I think it's more, because again, still there's a lot of things denominated in dollar, and like everybody's more focused on what's happening in the US in terms of like what is the Fed doing with with their policy, and that's why everybody's more kind of watching that side. If PBOC does something with the yuan, yes, I think that that's kind of important, but not as important. However, if China comes out with some sort of, let's say, a huge manufacturing drop or something, or let's say suddenly exports decline heavily, now that's a big thing. Now that's a global issue, and everybody's like panicking. And
but even with that, I only see the impact. I mostly see the impact on the Aussie dollar, not much across other pairs. Mostly on the Aussie.
True. I agree. No, but I mean, look, the more you depend on something, that that's what's gonna affect more. Actually, coming to the Aussie dollar, I mean, I'm looking at the Aussie dollar right now, and it's kind of flat-ish. I think it's not really.
Everything's flattish.
Yeah. Show me what's your thought on AUD USD?
before we get to that,
okay, sorry, yeah.
Let's get to the main highlight for today. The big news in 6 hours, or in 6 hours time, we have the Canadian CPI number to be released. Canadian CPI month to month minus 0.3, expected 0.4, median, and this is based on the Forex factory. I know different sources will have different numbers, but based on Forex factory, median CPI 3.6, staying at 3.6, trimmed CPI 3.7 to 3.6, common CPI 3.9 to 3.8. Looks like it's either going to stay there or drop slightly. There has been talk about the Bank of Canada with possibly looking at a rate cut decision coming on the horizon. I'm thinking that we might see the Canadian dollar weaken back a little bit more. What do you think?
I'm really to be honest. I'll be honest. I'm struggling with this one because I'll explain from my side. But again, maybe you agree, maybe you don't agree. So I think that yes, we might see maybe a little bit of weakness in the Canadian dollar. However, let me just look at something else. Another big indicator of Canadian dollar, oil, basically. So
that's the next one we'll get to.
Sorry?
That's the next one we'll get to, but yeah, tell me more.
Yeah, no. I'm not going to talk about oil yet, but basically that one's like still holding up and still has some potential. But if that one drifts somehow higher, and I think that Canadian dollar might strengthen on that. And if we do get some sort of like a surprise, like in the US we had, like where I had like one of my colleagues last week on the show, and we kind of said that the number is going to be above forecast but below the previous, and congratulations, it came at exactly that. So this one here, Canadian numbers are not allowing me to do the same thing again, to be
it's tight. It's a very tight number
above the forecast or below the previous. I mean, it's way too tight in there. It's either that. So I would say I think that the numbers might come out exactly bang on the expectations. Again, I don't know. We'll see, because it would really be interesting if the numbers would come out higher than the previous. Now that would really work favorably in terms of in Canadian dollar favor. Of course, also the fact that oil is a little bit pushing to the upside, so all that could strengthen the Canadian dollar, and the fact that US dollar this week is not in the epicenter, of attention. So that's why I'm kind of leaning a little bit towards the maybe strength of the Canadian dollar. Again, data dependent. I'll be like the Fed, data dependent. I'm going to be data dependent, and and then I'm going to react to when I get the numbers. So at this point, I'm okay. If somebody would put a gun to my head right now and say, "Hey, what do you think of the numbers?" I will say I think it would be a little bit either on the higher side, or just exactly as or basically as the previous, or the forecast. I'm kind of sticking to those numbers.
It has been trending to the upside slightly. Look, December, January has been beating forecast. It's been pushing up a little bit, so can't rule out an upset to the upside as well.
Yeah.
I'm just thinking that, is it time after the last two bumps up because of the festive period, because of the increase in demand, pushing CPI, could it be time now that we see a drop back down again, a reverse?
Could be, of course, everything could be possible. My only problem is that somehow when you see the tendency that that everybody's kind of following the U.S. right now, and everybody's following all these Western, especially neighboring countries like Canada. They're kind of following what's happening in the U.S. in a way, or Europe as well is kind of following what's happening in the U.S. Oh, we're not going to cut. Okay, we're not going to cut as well. It's like, we're going to raise. Okay, we're going to raise as well. So it's like, this is what I see normally. And like if U.S. came out higher, then let's put it this way, then okay, shipping costs to the U.S. or like in general costs that are occurred in the US. If it's showing that the inflation kind of picked up, then Canada is around there. Maybe the cost could be similar in a way, maybe even, let's say, sometimes a little bit higher, unless maybe they're subsidizing it heavily somehow, the government. But I really don't know. So at this point, I think that's why I'm not leaning way too much to the downside on the CPIs. Although, look, I might be wrong, but I'm just trying to kind of figure out, like if try to find some sort of logic in all this, because at the moment, looking at the USD CAD, in general, what I'm seeing on my chart on USD CAD is basically like a rising wedge pattern on the daily chart. So if it's a rising wedge, then according to all the TA rules, that tends to break to the downside. However, a breakout is still needed, so that's why for me, let's say the barrier for the downside is somewhere around that 1.3460 territory. That's on your chart I can see that is somewhere around here, 60, 65, somewhere in there. If I get a drop somewhere below that, I will lean more towards the downside, towards some strength of the Canadian dollar. However, at this point, while we remain in the rising wedge pattern, which I have on my, like I said, on my chart, then there is still more upside. The only thing is, like I said, I don't see any, like this week, any strength for the US dollar, and maybe next week, maybe. But that's why for me this pair USD CAD is a little bit more to the downside. However, some breakouts for me are still needed.
Okay, so how I look at it, I've got my 38.2 there. It tested on Friday last week, came back down. Right now, rose right back to that same level again. It looks like, looking at the dollar, it's still trying to push to the downside. So if we see that rejection at this point here, it might sit there. I'm thinking it might sit there over the next few hours. The news is in 6 hours time, so it might just sit there. I would be looking at something like below 1.35, right? And I know you don't like this part of it, but I'm looking at something like that. One is to 2 to the downside. If it breaks past this point, then we're going to see further downside towards this 61.8 level that has been testing and rejecting quite well. So it could look something like this. So US CAD below 1.35, 20 to 65 pips to the downside. Main thing for me is that it needs to stay below that point.
Okay. I see. What about, let's say, your downside scenario? Like, if you on your chart, if you draw from, let's say, from the low of, where is that? Like around from here, let's say a trend line to the upside or something like that, or maybe even you don't have to go from all the way there. You go from the shorter one, this one, this one. Like from here to there. So that's my still an issue with the downside. So from like a little bit higher, unless maybe we can capture a nice correction to the downside. So it's like initially. So maybe, like I said, this upside line could work. My only problem actually with this one, this is where I keep finding problems in everything. Do you think maybe this could be like something like a bearish flag on your chart, and that if you take that little
this area here, so like
section, like you have this. A drop, you have a heavily drop to the downside, yes, and then now you're having a correction, a little correction here. So maybe this could be something like a bearish flag.
Yeah, just as we were looking at this and talking, I see that pushing up slightly. Ultimately, the best setup, not the best, okay, disclaimer still applies, but what I would love to see is that. I would love to see for now, dollar to sit there, CAD to push back up a little bit. So we look for that push up, test, and reject, and then sell it back down. So
that would be really good.
Two scenarios, I would say either test and reject or below 135 and tight that way.
And that could actually work. I'm just thinking right now, because if the market does like to spike first,
Yep.
and then let's say, for example, if it wants to drift back down, let's say if it has already planned to go lower, let's assume, then it would spike up first. So that's where that level would come out nicely, your level in there, and then kind of we could see like a brief test of that area and then just kind of fall off. And basically, you would still create something like a little bit of a bearish flag. But the fact that this spike higher could be, let's say on a daily chart, could be like just a false kind of just a big tail.
Yeah, bigger tail. Yeah.
Yeah. While I'm talking to you, I'm also reading the chat room.
I can't see the chat room, so I'll depend on you for that.
D Diana. So he's they're saying that. I do time to time. So if you do analysis on desktop and execute on mobile, so because MT4 is not friendly platform to do analysis compared to TradingView. Yes, I mean I agree. This is where saying that I'm doing analysis on the desktop, and most of the time it's TradingView, and yes, it's the execution on the mobile. It's sometimes worse because you just kind of I'm using the phone as just like a buy and sell button. That's it. Like my phone, I see it as not as a tool for analysis, but like buy and sell, execute, like exactly to press buy or to press sell. That's how I see it. And okay, so far for now.
Another reason why I don't like trading on the phone is it's just so hard to put in the stop loss levels, take profit levels. I just like to click and drag around. I don't like putting the numbers in.
I enter straight away, and then I actually, after the trade, I apply stop losses and take profits. I kind of I enter first, and I do, let's say, I do the rest of the setups later.
Yep.
Because that's where for me. But again, it's up to everybody's, like I said, it's up to everybody's discretion. Kind of, for some it works. For some it doesn't. So you cannot say that this way is good and this way is bad.
We're 60% trading from the phone and 40% trading not trading on the phone on YouTube. Erwin just said, every time I trade on my phone, I make stupid mistakes. Well, it's okay. Just then don't do it. Then don't do it, Erwin. Don't do it. Okay.
True.
With that, then now, so that's the CAD. I'll do the summary again for you guys later on. We talked about the Aussie dollar, right? We had the monetary policy meeting minutes early today. No big surprises, but RBA minutes hint at rate hikes. I think that's just posturing. I don't think it's gonna happen. I think just putting it on the table for just in case.
Yeah.
Right. So. And I think most of the markets know that because at 8:30 with that news release there, we hardly even saw any movements on the Aussie dollar. That's right there, 8 o'clock. So it barely moved at all. It's still sitting there. We spoke about this yesterday. I'm still looking for that potential upside on the Aussie. I'll maintain that view, anticipating that dollar weakness to continue to push to the downside.
Yeah.
Maybe with the Chinese cutting rates, that might bring a bit more stimulus, might bring a bit more activity to the Aussies, and then that push up as well. So that could have hopefully, I'm looking for potential impact there as well.
What's your target right now?
66, about 66.20. Which is that previous highs there.
Yeah, I do have a similar target, but I have a little obstacle around the 0.6580 zone. So for me, that's going to be important. If that gets cleared, like I said, I'll look at it on the daily chart, and if that gets cleared, then great. I'll aim for some higher levels. But in the meantime, I'm just kind of aiming from where we are right now, just for say extra 50 pips, but then I'll see, because I don't know. This is the thing. if there is not much driving force coming out from, or let's say coming out from Australia this week, like in terms of news, and there is not much stuff coming out from the US, this might be one of those boring pairs this week, to be.
Yep, I agree.
Unless something that comes up, but at this point, I'm just like, probably Canadian dollar is the one to watch. If you're looking for some volatility.
Yep.
Maybe AUD CAD actually. AUD CAD could be the good option.
AUD CAD. You guys, I mean, everyone has been asking me about all kinds of different charts and stuff. I just don't know what to look at. Okay, so AUD CAD, I focus mostly on the majors. It's broken past a high. Yes, maybe more upside. My next resistance.
I'm leaning a little bit more towards the upside on this one. I have, like I said, a few of the targets around 0.8850, 64, 75, something like that. So these are little obstacles that I have on the way higher. But if all those get cleared, then yeah, it opens the door towards higher levels. The only thing is, like I said, what we talked earlier, maybe there will be some stuff that could support the Canadian dollar, and that's why we could see a reversal back down on this one. But again, for the downside, I would need to see this one actually kind of clearing some. Actually, you know what? Let me just. I'm just looking at my chart right now. Actually, no. If it falls back somewhere below the 0.8815, I'm going to switch to. I know it's very tight, very close, but I'm going to switch to slightly lower levels. If it's going to fall somewhere below the 0.8815 zone.
I like it at a round number.
A little bit lower.
Because at 88.15, it comes close to 88 round number, so I wanted to break below the round number level before
True. Could be a good one. But yeah. So
I think the safer option will be still to the upside.
True. Well, like I said, let's see.
Then onto my favorite pair, or what tries to be my favorite pair all the time, the US yen. I've been trading that up over the last couple of weeks to the upside. Right now it came back down. I'm just sitting there waiting. It popped above this point, above that 150, and I thought, great. Can I look to buy? And now it's pushing back down, dragging back down, not because of the dollar, right? I don't see the dollar moving to the downside, but the yen looking like it's reversing back, possibly due to comments. Where was it? I just saw it just then. There we go. Close, and they say this all the time. It's almost like you have to say it every once a month or once every 2 months. Closely watching the FX move with high sense of urgency. I don't even think they're going to be. I don't think an intervention is back on the cards. Do you think an intervention is back on the cards?
Yeah, because I think that they have to do something about it. I mean, look, of course, congratulations to them. They're enjoying the slightly weaker Japanese yen. They're increasing. If you looked at the trade balance of Japan, and that was like the exports improved, and well, really, why? Wow, suddenly, wow. Because of the weaker Japanese? No, of course not. So that's why still I'm leaning still more towards the upside. Can I share my screen
Sure,
very quickly?
Of course.
So I will show you what I think here on USDJPY. So basically, this week, as I already said, that I am going to be very careful with the US dollar because I don't think that there's going to be much strength. But so what I'm looking at here, this is a daily chart, and I'm still, like I said, leaning towards the upside. I have this. You can see that this barrier here, we've been near the 152 territory back in November. So in a way, there is still room for, let's say, testing that area. So we've came close to 151. Didn't test that yet, but maybe. So let's say if there is some sort of suddenly some interest in the yen, okay, we might see some a drift lower here, but overall, I'm still looking at this upside line drawn from the low of the 28th of December. So if we do stay somewhere above that upside line, I will consider this move. That's why I have this curved arrow to the upside. I'm still considering a move back up. And again, this 151.95 roughly in my chart, where we were in November, and we were here back in October of 2022. So in other words, in the bigger picture, we are seeing this forming. So we have this key important area of resistance. So that's why I'm not really saying anything yet, because in terms of, let's say, in terms of the downside, I'm still leaning more towards the upside. Maybe for this week, it will stay somewhere around here, but then next week, given the abundance of US news, maybe it could drive this one higher and test that 152 territory. Maybe we could even overshoot it at some point. And this is where I would say the BOJ could be secretly, intervening. Of course, I don't think that it would be maybe public, or it will become public only maybe like a month after.
After it's dropped 200 pips.
Sorry?
After it's dropped 200 or 400 pips, and they go, oh yeah, we did that. Yeah.
Exactly. And they will say, "Oh, you remember like February? Yeah, we intervened then. Yeah, sorry, we forgot to tell you." But that's why I'm saying, like I said, I'm still leaning a little bit more towards the upside. I like this barrier, this 151.95. I really do. I mean, I'm not saying that exactly that level could be hit. No, I'm saying that the area near that level could be hit. For me, the downside scenario, I need to see a break of this upside line, basically. So for now, I'm just seeing some sort of like kind of sideways-ish activity. I think that this might stay like this week. Maybe we could end up just testing this upside line, and if it holds next week, we could go back to the upside again, subject to, of course, data dependent.
Actually, based on data dependent and the typical line, why I didn't think that they would intervene is the increasing talk about adjusting the monetary policy. So it might not be an intervention, but a shift in policy. Do you think that's that's going to happen?
Well, like the whole shift of the policy in terms of increasing rates.
Yeah. Increasing rates but maintaining a loose QE.
Like loose, and on the other way around. So just keeping that the same. Yeah, I think that they will continue running, because it's, I don't know. I think that for now, inflation is not rising in Japan. It's not really like getting higher or anything. So there's no logic. Yes, they're saying, oh, we need to increase rates and stuff like that. There are some analysts who are saying increase rates, but if you just purely follow the same monetary policy system, or let's say the rules that inflation goes up, you increase rates as well. So that's not happening. So why? Then you'll have other critics saying, but why are you doing this? Because if the model is not, the model is not broken, so it's still working. So why are you deviating from that model? And you have to kind of explain yourself in that sense. So that's why I think they will just continue running with it unless inflation really jumps heavily to the upside. And the consumer confidence, I think, in Japan is not the greatest. So again, official. I don't know. Maybe actually in the background it's okay. I don't know.
I'm just thinking that for any intervention to be sustainable, right? We've seen them I've seen 4 or 5 interventions through my years of trading. It's not sustainable. It's intervened, it comes back down for maybe a week, and then it goes right back up again. So it seems like the only way a sustainable correction back down for the US yen would be a shift in policy.
But again, I think that maybe that's what they don't need yet. Maybe, I don't know. That's why, like I said, they're focused on their exports and
keeping it cheap and
because Japan in general, I mean, it doesn't have much to offer in terms of let's say, other apart from technology, right? I mean, okay, medicine maybe in some sort of way, but even then, I don't know. But okay, I get it. It's more expensive for the consumer to buy stuff, especially given that you don't produce much in the country. Well, you do produce, but not enough. That's why you need to import, and your imports become more expensive and stuff like that. So I think that look, these interventions, I think that they will continue being those impulses, impulses, and just fix it a little bit, keep it right now. Fix it a little bit, try to fix it a little bit, quickly ramp up the exports. And then maybe get some money out of that, then subsidize from that extra money, subsidize the consumer, so that they could afford buying other stuff, right? And then again, calm down. It's like this, sinus cosines,
and if you zoom out your chart, it's exactly what your hand movement was doing.
Yes, that's what I'm saying. So yeah, true. So. Okay, look, we had some rallies here, big rallies, but that was back in 21. But okay, that was pandemic because everybody was in the yen. Everybody was afraid, but now from the end of pandemic, right? I mean, it's we were at around 100 and now we're 150. That's wow. So I think somehow that this moment, I think that we will go back down again, maybe to 148, something like that. But I think that eventually I think we will maybe look. This is my problem. This is where I really don't know, and this is where I'm trying to speculate as much as I can because I'm trying to find some sort of logic in this sense, in that sense. So in general, what I'm seeing here, I'm leaning more towards the upside. So in a way, I'm leaning towards that radical moment of reaching the 200 level, right? However, I get it. It's way too radical, but I'm not talking about this year. No, I'm in the longer run. But the fact that indices are way too high, and the fact that everybody will start shifting to the yen at some point this year, probably because the indices will have to go down. That's why I don't know. I mean, maybe this will actually could go back down heavily, maybe even to 140s. Something like that. So that's why I like this level right now, the 151, 52. And then I want to see, but I think I will be a strong supporter of the yen actually. So, but maybe this is where they will start talking about, as they normally do. They will start not doing anything, of course, but start talking about, increasing rates. We should increase. And this is where everybody's like, oh yes, buy Japanese yen, boom, boom, and, yeah, but they're not going to do anything eventually. They'll just follow the example of the Fed. You just say that you're going to do it, and then you use that tool.
And increasing rates is gonna affect the indices as well. But
sorry,
increasing rates is going to affect the Nikkei as well. So,
well. I'm sorry. Can I just while I have my chart?
So before you do that, I just want to tell everyone that if you have noticed, we're talking very broad-based. We're talking about macro stuff on the dollar. We're talking about broad-based stuff on the yen. Very dissimilar to the regular stream is because we were on this. We were talking before this, and we were looking at the charts and go, "There's nothing happening." Right, you can see everything is sitting right across. So I wanted to take this opportunity to share with anyone who's watching, that there are times where if markets are not moving, you don't have to try and force a trade. You don't have to try and do something. Nerds, or nice way of saying, market analysts like us would sit there and start thinking about broad picture things like that. So just giving you guys a snapshot view into what we chat about, what we have fun chatting about.
I could not agree with you more, Jindav, because basically it's this is sometimes you take these opportunities actually to evaluate the overall market. If it's quiet, then okay, that's great. Use that. What's happening. And I wanted to show you this. You mentioned Nikkei. I know you don't look at indices, but Nikkei is amazing right now. And I'll show you what I mean about this. So this is I have this chart, but that's the daily. But that's even not that I want to show. I want to show the monthly chart. Look at this animal. I mean, this is just amazing. This is just, we are near the all-time high. We are near the all-time high. 1989, we were last time here at 1989 90s. So we were basically, it only took us around, what, 33 years.
Don't ask me how old I was back then.
It's okay. We'll have our secrets. but what I'm saying, like, oh my God, like, look at this this monthly chart. We are this 38,957. That's what I have here on my chart as the all-time high, which was reached in December of 1989. In January, we kind of failed by a few points to reach that level, and we started our big decline only up until what, here in October. Well, basically this is the big crash.
Yep.
I mean, right, the big subprime crisis moment, and we reached this bottom here around 7,000, and from here it was only up and away. So congratulations to those who were in Nikkei. I mean, but now, if you look at it from this side, I mean, can we go above this all-time high? Well, to be honest, I'm kind of leaning towards that. I'm leaning for a little bit more upside. But this is the point where, they might start talking about the raising rates idea, not like even doing that, just idea. And this is where, you could bring the stock market back down. This is like, you would have a beautiful double top on this one. And would just be fascinating. And look at this. This will be just crying for a short at some point, honestly. This will be just like, please, short right now. But we need a catalyst. We need some sort of a trigger point. I mean, it will come just out of nowhere, out of the blue, I think. But we will just have to adjust then. So this is kind of, like I said, I just wanted to share with everybody
It'll push up, touch 40,000. Then they'll talk about interest rate hikes.
Yep.
And then it goes. All right, I'm going to set up my account. Send me the link. I'm going to set up my account. I'm going to get ready to sell it. Put a couple of pending sells in and let it ride all the way down.
You can do vanilla options on our platform as well. So
send me the link.
Yeah. So yeah, you can check out that option as well. That would be like the cost-effective option. But anyway, I just wanted to share this.
Very interesting. Thanks for sharing that. In the meantime, everyone, please remember, help me out, help us out. Click that like and subscribe button if you haven't already. I do have a couple more to get through. I know I always tend to overrun, but we're not going to overrun by too much today. But yeah, help me out. Do remember to click that like and subscribe button, that thumbs up button there. It would help massively. There was a question from Daily Gaming on YouTube about gold. Okay, so we'll get to gold. I think you were talking about that one. That moved out. No, that was. Hang on, let me check back on the message. In the Monday start of the market opens, gold stopped in awe, and I lost my deal. Can you look at Monday candle and explain what happened? Okay, so I think that's the one you're talking about. Where was it again? Okay, this candle, I think Daily Gaming is referring to this candle on early Monday morning. I don't have an answer for that. I don't know why it shot down. Typically, I would look at what happened on Monday. No, that's Tuesday. So Monday morning, we did see, nothing happened there as well. Do you have any idea what happened on gold to the downside?
I am checking right now some other sources, and basically, well, first of all, I can say that on
Hang on. I think you're crackling up on your sound. Okay.
Can you hear me?
Yep.
Yeah. So basically, I am checking right now, let's say other sources as well. However, I can see that on our platform, this did not happen. And we do have, like, we don't have that big tail. So it kind of drags all the way where? To like 2000, right?
Yeah.
On your,
Yep.
because I'm looking at on Monday, that was, yeah, okay. So I think that was just, well, this is sometimes what happens with brokers. And to be honest, look, it's you need to be very careful with brokers in general. I mean, okay, I understand. I'm representing a broker.
This is the market insider news, market insider tip.
But the thing is that you need to be very careful with other brokers, because again, you need to kind of choose your broker carefully. Like I said, we don't have that tail on our chart. I can share the screen. I mean, or you can actually go and check gold chart on Easy Markets. We don't have that. So, but the thing is that sometimes they do. Depends on the liquidity provider as well, who's using who. And this is. I mean, you cannot. You cannot know this information, because you normally don't ask this. But and again, if you do ask, let's say, a broker, who's your liquidity provider, and then like you suddenly say, oh, it's the one in the bottom there, yeah. So okay, they will tell you, but
do they? They're usually quite secretive about it.
Yeah, but then okay, if they tell you, like, what does it tell you? I mean, unless you know how, for example, this liquidity provider works, then okay, yeah, you might say, yeah, that's fine. So you see that there we go. We don't have that
that one there.
So yeah, so you need to be, like I said, it happened with me in the past when I was like on my own. I was using different brokers, and like honestly, some brokers, for example, with some, I remember this one instance in the good old days. In the good old days, when I remember I was trading NASDAQ, and I was trading, I'm not going to say the company, I was trading, I had two companies I had open, the charts, and on one company, there was like a move, some volatility kicked in, and honestly, like there was like a tail that, I don't know, it was like honestly way, way, way heavily to the bottom. And I was like buying NASDAQ, and on one platform, I'm looking like, okay, that's all normal. On the other platform, it was like, shoo, like this, like to the downside. And then it went back up. So beautiful moment to take out a lot of stops. I mean, because like you can see all the stops, and you can see where everybody's placing stops, and and that's why sometimes everybody probably came across this idea this scenario where you've put a stop, it went to your kind of stop loss, take you out, and then reverse back up. So
I was just about to ask. I mean, I didn't know whether it would be something appropriate to talk about, but. I
will tell you if it's appropriate or not. You ask me, and then I'll say, oh, I cannot say.
Yeah, is this really like what we're looking here? Is this really like, could it look like a deliberate stop hunt?
You will not know, because
do brokers deliberately stop hunt?
No, some do, some don't. So this is the thing. Some do, some don't. So it depends on how much you're willing to damage your reputation, So it's normally I mean, in general, it's not happening. In general, like for example, we don't. We just like let it run and whatever. Like but it sometimes depends on the liquidity provider, and also sometimes let's not forget that, for example, when you're trading with the broker, you're actually trading their product. So it's their product, which is a reflection of the original underlying asset. So in a way, you kind of that you're trading their product, and on their product, a tail like that could have happened. Because again, they depend also, the broker depends on the liquidity provider, and That's why you kind of, you might get something like this. Maybe, like I said, this could be in control of the broker, and sometimes it can be not in control of the broker. So you really, and then it depends how the broker deals with you in this sense. The only thing is that, again, it's it is explained in the terms and conditions. So unfortunately, and look, it happened with me in the past as well with different other brokers, and unfortunately, it's kind of, this is what you get. The only thing is, what I can say is that, let's say if it constantly happens, then you see that there is an issue, because the broker sees that there's an issue like that as well, but doesn't do anything about it. So that means, in a way, it's kind of deliberate in that case, So that's why you need to, let's say, I've changed a lot of, when I was, like, say, trading before easy markets. I mean, when I was I was, like I said, I was changing a lot of brokers just because of these little issues. Somebody takes you out somewhere, like, you think that, wait, but the market didn't go there, and this is what, like I said, this is what happens.
I used to run three screens. I would have 6 different brokers on it, just to make sure that we get reasonable pricing. Yeah.
Look, I follow the simple logic, trust but check. So.
Okay,
yeah.
so to answer Daily Gaming's question, we check with the broker. We don't know why there was a big spike. We've shown you that on the easy markets pricing, that there isn't a big spike down. So a quick plug is, you can, I don't have a link, I don't have a referral link, so you can go message Darius or go check out easy markets if you want to try out the accounts. Erwin said rigged with a smiley face. Sometimes maybe.
No, it's not rigged. It's not like, look, there are brokers that are rigged. Honestly, there are, unfortunately, in this industry, there are, like, bad apples and there are good apples, right? I mean, look, we've been, like, in the market for, like, more than 20 years, so we just kind of stick to the rules, we stick to the legislations, and we just, maybe we're not the most competitive in that sense, but we stick to the rules. So it's like, that's why we value our customers who come, and we offer, like I said, we try to offer the good service, so that people would kind of stick around with us, for longer. So that's the whole point. But there are, let's say, bad actors in there as well. So it really depends. So
as with every industry. But I like what you said, trust but check.
Exactly.
All right. So any further questions? Very different angle for today's stream, but I enjoyed it. I'm looking, it's gone onto my hot list now with the Nikkei index. Diana had a question, I answered that, but she was asking correlation between a weaker currency and a positive performance in indices. It makes it cheap. I said that it makes it cheaper to buy the index, so weaker currency attracts investors. Any other questions? If not, I think we've covered different topics today, and I think it's been quite interesting.
Yeah. You want to have a look at euro dollar very quickly?
Yes, of course. Is something happening?
Because that one's going to be interesting for this week, because of the Eurozone CPIs.
You want to share your screen, actually?
Yeah, if you don't mind.
Yep.
Let me just do that very quickly. So that's what I have on my side. It's coming through. So I have, of course, I'm looking at daily charts. I like them. That's my thing. I like those daily charts. So what I'm seeing right now is, yes, we saw a good, strong reversal back up from the 1.0695, just basically slightly below the 1.07 territory. We pushed higher. We tested the downside line, and now we're holding. This downside line, by the way, is taken from the high of the 28th of December. So we're now holding below it. Now, again, if we do break the downside line, this kind of opens the door to some higher levels. But as you can see, my upside scenario is from around here, from around this 1.0805 area-ish. My only problem with that upside scenario is the fact that I have my EMAs, which could be in a way a little bit as well. But if those get cleared, yes, I'm leaning again towards that 1.09 zone. However, there's the main rule that you need to follow. As always, if the trend line still remains intact, the trend is in that direction. So in a way, there is still a chance for this one to drift lower. Me being me, and which I don't like these moments here. That's why, for example, my very conservative approach towards this in terms of the downside is from around this 1.0695. So I would rather sacrifice all this area here and would not do anything if it, let's say, if it continues to trade around here, and just wait until we get a nice drop below the 1.0695. This will confirm a forthcoming lower low, and I'll be very, very happy, and I'll be aiming for some 1.0656 or even below that, or even towards that 1.05 territory, which could be a nice good target as well. But again, given the fact that we're right now very close to this downside line, there is a chance of breaking it. However, again, of course, subject to what's going to be happening
dollar
with the
as well.
Sorry?
Subject to the dollar as well.
Yes, exactly, totally. And like I said, there is some potential for some upside. The only thing is, because we're in the beginning of this week, we have the CPIs coming out tomorrow, is it? Or no, wait, Thursday, right?
Yep.
Thursday, yes, Thursday, Eurozone CPIs are coming out. So let's say if dollar weakens somehow, right now in before Thursday, then we could see a nice move to the upside, maybe test this territory. But if somehow the CPIs come out as normally they do, they come out like in line with.
It has always been in line, actually.
Yeah, exactly. So at the moment we're expecting a lower number, a lower CPI number. If it comes out exactly as it expected, then basically that would be weakening the euro. And this is where it could become beautiful, because we could pop higher, test maybe this area somewhere, and then on Thursday, let's say the CPIs come out as they expected, as normal, and everything drifts back down in preparation for next week for the dollar to strengthen and for this pair to move lower. So basically you create a nice false breakout on this one, on the euro USD, and then you kind of back on track. So if right now the direction is to the downside in general established, right, then you do this quick push higher, and basically that means on the weekly candle you will see a nice false breakout here, and then you'll take out a lot of traders, and it'll go back down. So yes, the kind of the typical scenario sometimes, which happens. Yeah, that's my take. Again, maybe I'm wrong. We'll see.
I'll share my screen quickly. Being the last one, I'll share my screen quickly. It's really interesting that you have your EMAs there, you have your line there, because I was just talking about this yesterday, and all right, I have from this move on the top on the 2nd of Feb down to this level, I got my 50% level, and that's at 108.10.
Yeah.
It's almost exactly at where you were, and I'm going, right, if it breaks that, then we got a bit of a move to the upside towards that almost 109 level. If it rejects, then we can sell it back down. It's, it's the same thing we're talking about.
Exactly.
Yeah. So that's the level. That's the level to watch out for. It's not ready yet. It's just popping up now, but it's not ready yet. I think that we need to see what happens at that resistance, which is where we spoke about.
I like that 1.0810. I have my 200-day EMA around there. So
yeah, I saw your 3 lines stacking up there, and I go, brilliant. It's either going to break through and shoot up, or test, reject, and come right back down again.
Yeah. True. Yeah.
Okay.
We'll see. Of course. Yeah.
Do
you have any more questions?
Pound Aussie and US 100. If we have time. Do we have time?
Yeah, I think we have. Pound Aussie and NASDAQ.
Where are you guys? There you go. Okay. Pound Aussie pushing to the downside. Big support here. looking at the next level down, I mean, that's how I would just approach the markets. Thinking that the Aussie dollar could push back up, could strengthen back. We were just looking at it just then. I would say that we're possibly looking at the downside, but the pound has been, I'll put that there first. The pound has been sitting there. I was looking at a test and push back down, but it looks like it's sitting there despite what the dollar is doing. So I think pound is just going to consolidate with the Aussie maybe pushing back up. So pound Aussie, I would say that if it breaks below 1.9255, we could trade it. I think that's a small move though. Let's say, yeah, that's a 50, almost 60 pip move that way to the downside. It needs to clear that previous, all those lows there. The 1.9252 of, 25 to 55 to the downside. Your thoughts?
Yeah, I'm also leaning towards the downside, but again, the same story. I'm only leaning towards the 1.9220 or 1.92 itself. So that's what I'm leaning to only. Like, it's not a huge move unless it starts clearing the 1.92. Then yeah, I mean, of course, great, more downside. But at this point, I'm just kind of targeting that. And for the upside, for me, I need to see a push maybe somewhere back above the 1.9342, 440 zone, something like that. Yeah, at this point, I am kind of still leaning a little bit more towards the downside. Yeah, so that's my game plan. I saw there was a question about NASDAQ as well.
I'll let you take that one.
With NASDAQ, look, in general, of course, from the technical perspective, it's let me just let me just put this one in the chart. So from the technical perspective, it's kind of showing a little bit of an indication towards the downside here. But look, still, as I said, the markets right now, at the moment, what we could see a bit of a retracement, maybe a little bit, but not much. I'm still kind of leaning towards the upside. So basically, I'm still leaning towards the upside, let's say, in the beginning of March, because we do have the Fed coming out in March. Let's not forget that. When was it? When was that day? 20th of March.
20th,
so,
yep.
I'm kind of leaning towards, so let's say right now we will pause the end of February. We did a good run already to the upside, so maybe we'll do another good run to the upside in the beginning of March up to the Fed, and then the Fed will come out saying that, oh, you know what, we're not going to cut again. So, and this might actually bring the stock market back down. So that's why right now, I mean, I understand that everybody's right now very eager to sell, because everybody wants to just short the hell out of this one. But I don't think that we still have some surprises. If let's put it this way, after having such a strong rally to the upside, and if we are looking for some sort of a correction back down, we need some sort of a sharp move to the upside, like a spike, where every short seller is taken out basically, and then you collapse. So the usual kind of market tendency, right? I mean, so yeah, I mean, at the moment, although we could see maybe a bit of a move here and there to the downside, but still overall, I'm leaning a little bit more towards the upside. And given the fact that Nikkei still needs to test that 40,000, hey, it needs some food, for some upside. So I don't think that the U.S. will actually, drift. I mean, it might drift a little bit lower, but for me to start examining the downside, let's say at least from this point, at this point, I need to see some breakage here, especially below my 50-day EMA here and on the daily chart, and then yes, I will start looking at some lower levels. I saw a comment in YouTube. I don't know. Did you see that one from Urban S? If the market isn't rigged, why would the XY jump up after trading hours before Asia session. Again, different, I don't know, like different opening hours and different brokers, different,
There's a rollover. There's a rollover as well. There's pricing. There's liquidity.
There are adjustments. There are adjustments, of course, every time. There are adjustments in the pricing as well. That's normal. That's common. That's standard. So that's why, in general, the idea is that don't hold the position overnight. In a way, I mean, if you have to, then just you have to factor in all the possible shifts. So, for example, especially during the weekend, when, let's say, you're trading something, right? And like if you're sitting somewhere in Europe or in the US, you're trading that DXY, and then something happens in Asia, and Europe is not open yet. US is still not open, but there's some. I remember this moment when Japanese yen was like heavily. Everybody was like buying Japanese yen. AUD JPY was like to the bottom. Honestly, that happened overnight, and that's why you don't keep it. You try to close your positions. If if it's a loss, take a loss. I don't know. Like, I mean, anyway, again, it's up to everybody's. Everybody's.
But there's just things to consider when you're doing different styles of trading. Intraday or swing or different methods.
Yeah, true. So you need to factor in all the possible price adjustments and price, shifts. It's not really like just smooth sailing from everywhere. No, it's, when I trade, I always think when I go into a trade, my first thought is like, oh, how can I quickly get out of this? I'm not thinking about profit or here or levels. No, I'm thinking shit. Like I need to get out of this as quick as possible. Not because it's going in the wrong direction or something. No, or where to exit. Sometimes if it's in profit, then this is sometimes also a big question for yourself. And this is where the big game, where to exit profit. Because, hey, I'll keep it running. You can. The only thing is that protect yourself, or take a little bit, then keep the rest running. Yep. This way you can have both.
I was watching. Last night I was watching the GameStop video on Netflix, and these guys were. I did not get involved with the whole GameStop and the whole period, but they were holding like 40 million and they didn't close out the trade, and just hold on, and it came back down again, and people had $100,000 of profit and got into negative positions after that. So my same thought is whenever you're in the market, you're exposed to risk. So the best risk management is to take a profit, get out, reset, think about it again.
Control your greed. That's what's going to eat you. Not the broker, not the candles, not the tails on those candles. No, you're sometimes your greed. Okay, that as well. Yeah. But it's greed as well. So sometimes just I tend to take if I see that it's not going and then I'm thinking, okay, should I keep it over the weekend as well? Will I actually gain as much? And I mean, unless I'm thinking that over the weekend something can happen that will affect the price, and this is why I probably could hold the the asset. But if not, then just if you think that after on Monday you will gain extra $1, then no, don't do that. Just close it, take the smaller profit. So yeah.
Okay, so thank you so much, Darius. It's always been a pleasure having you on the session. Today we've gone through a different angle, but I'm sure everyone has learned. I hope you've all learned heaps. Again, if you enjoyed the session, please put it into the chat. Let us know whether you're on YouTube or TradingView. Give us a feedback. Let us know how what you thought about the session. If you like it, we can do some more, maybe. If you hate it, then we'll definitely do more just to make sure you like it. And help me out. Do click that like and subscribe button. And please join me again to thank Darius for joining us on this session. It's been an absolute pleasure.
From my side, again, I honestly, I like doing sessions with you, Jin, and it's really fantastic, and I like it. And you know, I think we're having a good flow, and we can actually come out of situations when the market is just like dead, and we can actually, you know, think of something to say, and you know, and that's why I think that, okay, look, yeah, I mean, as you said, not the usual, not the typical one, but you can have those interesting as well. So, you know, but yeah, thank you very much for having me on the show. Thank you. Really appreciate that.
Thank you so much. Alrighty. D-Train said, nice discussion and covered topics not usually discussed in a daily stream. Good, fantastic. Thanks, Goju. Thanks, Jim Brown. Thanks, D-Train. Thanks, Diana. In your case, it's just smashing her. Well, remember to smash that like button as well. Thanks, Erwin and Alexander and Daily Gaming. Thank you, everyone. Please take care, trade well, trade safe. We'll be back tomorrow on our individual streams at the same time, so you have to choose who you're going to watch live. But either way, it's all good. Alrighty, that's it.
You can watch always recorded. Mine. You can watch mine as a recorded session. It's fine. You know, I really don't mind.
No, you have to choose. All right.
Yeah, but anyway, yeah. Thank you. Thank you very much.
Thanks, guys. Bye-bye.
Bye.